Well, comrades, welcome again in today's discussion. We want to look in topic 2, that is source documents and books of original entry. Source documents and books of original entry. Good. So that is topic 2 of financial accounting. And I think financial accounting 1, topic 2, and I think in other areas you can see it be combined. That's just confined in one area, that is topic 1. Good. Now that means I will start by introducing now our topic today. Let's focus now introduction to accounting books. Introduction to accounting books. Introduction to accounting books. Introduction to accounting books. Good. Introduction to accounting books. Good. So accounting books, first we'll start with the definition. We'll start with the definition whereby you'll say, if somebody asks you what's accounting books, because we want to venture into them. So we'll say books, these are books in which business transactions are recorded in. These are books in which business transactions are recorded in the business daily activities. Good. In business daily activities. These are books in which business activities are recorded in. Business activities or business transaction. Let's say business transactions. Business transactions are recorded in. Good. You remember in our first topic, while we were doing our discussion, our introduction to financial accounting, we mentioned something on business transaction. And we said in a business, there are two types of business transaction. So let me expound on that first. Business transaction. You remember very well, I said there are two various types of business transaction. One, we have cash transaction. And we have credit transaction. Good. And I defined and I said cash transactions are those transactions in which you buy goods and you pay for those goods on spot. You buy goods and you pay for them on spot. When I come in your shop, I buy the pen. I give you, if you are selling it at 50 shillings, I pay it immediately, that 50 shillings. And here, cash transaction, I can pay you using cash in hand. I can pay you using either cash in hand, or I can pay you using check. So when I pay you using check, I've already done what? Have done a cash transaction because I've paid it on spot. Good. What about credit transaction? Credit transaction, we define it and said this is a business transaction in which you buy goods and pay for them at a later date. You buy goods and you pay for them at a later date. Good. So we are on introduction to accounting books. And we have said accounting books, there are books in which business transactions are recorded in. So we are going to look for those books in which credit transactions are recorded. Where? Because you cannot mix this. We have separate credit transactions where we will be recording our transaction, and we will have where we record cash transaction. So that was about the definition. Now, accounting books is categorized into two. Accounting books, they are categorized into two. So categories or classification, you can say classification of accounting books. So we'll say accounting books here, right? Accounting books. And you say accounting books, they are categorized into two. One, we have books called subsidiary books. We have books called subsidiary books. And we have principal books. We have principal books. We have principal books. We have principal books. Good. Now, I will start with what type of these subsidiary books. We are called subsidiary books. Good. Now, you will realize subsidiary books. First, I will explain one by one. Then I will give you the difference between the two books. First, this subsidiary books, it has got various names given to it. Apart, you can get other people calling this book books of original entry. Books of original entry. One, you will realize they're calling it books of original entry. Original entry. Why? They call it books of original entry. Why? Because these are books in which transactions are first recorded. There are books in which transactions are first recorded on daily basis. Others will call them journals. Others will call them journals. Why call them journals? They call this another name, that is just another name for subsidiary books. You can refer to them journals. Why? Because they are journals because transactions are recorded in them in a chronological order. They are recorded in them in a chronological order. Whereby a transaction that happens maybe on Monday, it must be recorded by that Monday. A transaction that will come next maybe Tuesday, it will be recorded on Tuesday. Not that you wait, you come and record a transaction that happened on Saturday and you're coming to record on Monday. That is very wrong. It is happening in a chronological order. That's why you refer to them journals. Journals. Other name can be given to this. You can give it another name for subsidiary book. You can call it day books. Day books. Day books. Why? Day books in a manner that transactions that happen on daily basis. Transactions that happens on daily basis, they are recorded in these books. They are recorded on these books. And you realize you cannot record a transaction in principal books without recording in subsidiary books. You have to record in subsidiary books, then you post them to principal books. Good. Another name, you will find other people, other books, they can call, refer to it as another name in regards to that, they can call it books of first entry. Books of first entry or original entry, the way I've said, it's just the same because transactions happening on daily basis, they are recorded there. Day books I've mentioned because transactions are recorded there. On first day journals because books are recorded there. They are recorded, transactions are recorded in a chronological order. Another name you can call, you can give this books of prime entry. 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 Good. So those are just names. Other names you can refer to the subsidiary books. Subsidiary books. Good. After that, we want to look now the examples, the various examples of these subsidiary books and principal books. And before we go to that, let us look at the difference. What is the difference between subsidiary books and principal books? The difference between subsidiary books and principal books. So you can say that subsidiary books are books in which transactions are first recorded. In which transactions are first recorded first before transferred to principal books. Before transferred to principal books, whereby the principal books, they observe double entry system. Good. That is the keyword there. The difference. Double entry system. Double entry system. The principal books, they observe double entry system. But unlike the subsidiary books, they don't observe double entry system. So that one we will understand more when we will start venturing in practical example, which I will show you. So the difference there, you can say principal books follow the double entry system, unlike subsidiary books doesn't follow. Doesn't follow at all. Good. But we are going to see in that. Now, after knowing the difference between the two books and knowing, let us now see the examples of these books. Let us start with the subsidiary. So, examples of subsidiary books. Subsidiary books. Good. There's something I failed to mention. You can see the word there, diary. You can see the word there, diary. Diary, you know, the subsidiary books, we have said there are books in which transactions are recorded there on daily basis. Even as we have diary in our pockets now. Anything that you want to do on daily basis, you record in that diary. That's why you can see it, even the word diary attached to that subsidiary books. Meaning, transactions are recorded there on daily basis in a chronological order. Because in my diary, I cannot come and record maybe something that happened in the morning. I have to record that thing in that morning. But when it comes to the evening, I will now see at this particular time, this happened, this happened, this happened. Same to even the end of the week. In my diary, it is in a chronological order. Good. Now we are looking into the examples now. Examples of subsidiary books. One, we have, so you can draw a small table. Let us just draw a table. Let's draw a table. And that table, examples of subsidiary books, stroke principal books. Stroke principal books. Principal books. After we have introduced, we have known the introduction, we have known their definition, we have known the difference, we have known types of transaction that are going to be recorded there. Let us now see examples of these books that we are talking about. What are examples of subsidiary books? One, we have sales journal. We have sales journal. Sales journal. Sales journal. Sales journal, I will let you know the uses of it. Two, we have purchases journal. We have purchases journal. We have purchases journal. Three, we have something called sale return journal. Sale return journal. Sale return journal. I'm going to show you to tell you the use of this book. Sale return journal. Then we have purchases return journal. That is another book of subsidiary book. Purchases return journal. Purchases return journal. Then fifth, we have cash book. Cash book. I know cash book. Let me write there cash book. Then the last book I write general journal. General journal. I have the reason I've started with the cash book. The general journal. General journal. General journal. Good. Then the examples of a principal book. One, we have ledgers. Then we have cash book. Good. Cash book. Now, that's wonderful. I know the question might arise. Why is it cash book appearing both in subsidiary book and principal book? Cash book is the only book that will appear on both sides. Why? Cash book, when cash transactions are happen on daily basis in the business, we record them in that cash book. At the same time, cash book, it observe double entry. Double entry, cash book. It observe double entry here. So we are going to venture to learn more on cash book when I'll be handling the single column cash book, 2-column cash book, and 3-column cash book. I think by that you will understand how we record transaction in that book. Now, that I was just giving out why is it fine. You find it is in the subsidiary books because here the transaction will happen on daily basis on cash transaction. And here we have also cash book observing the double entry. That means let us get now the uses of other books. We have sales journal. Sales journal. Now, listen. Sales journal. Remember, we said in a business, there are various types of business transaction. One, credit transaction and cash transaction. Now, credit transaction. If there is any credit sale you have made in a business, credit sale you have made in a business, you record in a sales journal. Credit sales. So the purpose, credit sale. Credit sale. So you realize credit sale, anything to do with credit, all creditors, you will find them, all of them, they are aware in sales journal. So any credit sale. So if somebody asks you to define sales journal, you will say this is a subsidiary book. It's a subsidiary book that used to record credit transaction in a business. Credit transaction. So any credit sales, they are recorded here. 2, we have purchases journal. Yes, as the same as we make credit sales to our customers, whom I refer to them debtors, the same time I will also have to get goods on credit. So all credit purchases. So nothing else will come in this book that rather than not credit purchase. So any credit purchase, credit purchases will be recorded here. In case you get from your supplier, supply you goods, and you pay them later date after you have sold your goods, you are going to do what? To record in purchases journal. You're going to record in purchases journal. So there's no way you have made a credit sale, you come and mix in purchases journal. That is not accounting. So get it very clear. When you're in business, you have been tasked to record, maybe you are working as a maybe control of the creditors and the debtors know the books you are coding them in. Good. We have sales return journal. Wonderful. What is the purpose of this book? Other books you can find it calling return outward journals. Return outward journals. Return inward, not return outward, sorry, return inward journals. Remember, you can sell goods to your customers. When they go home or when they reach where they are going, they realize the goods that you sold to them, they are over maybe in excess, or those goods, they are of maybe poor quality, or those goods does not go with the taste and preferences of their own. So you realize those goods, you will record when those goods are returned to you, maybe they are in excess. You sold to them goods worth 200. But when they reach there, they find you packed for them goods there worth 400. So they will return to you goods back 200, your excess. So these goods, when they are returned, they are being recorded where? In sales return journal. We are going to see all those source documents. We are going to see those source documents. Source documents meaning those documents that will accompany these goods when they are coming back to you. You know? So that is sales return journal. It records all goods that are being returned to you. You will always get another question. While you are doing an introduction, you will get a question. State reason why goods are maybe returned to the business. 1, poor quality. 2, in excess. 3, not going with the taste and preferences. So those are just point to in excess. Those ones. Good. So there it records the credit sales being returned to you. Credit sale. Remember credit sale. So all credit sales that you sold that are being returned in. So these are goods of credit sales returned in business. Good. Then we have something called purchases return journal. Purchases return journal. We purchased goods after getting into the business. 1, we realize these goods, they are in excess. These goods that are of poor quality. These goods, they are not going with our taste and preferences. You do what? You'll have to, maybe if they are in excess, you'll have to get the excess ones and return to them to our creditors or our suppliers. So here, there are goods that we return to our supplier. Return outwards. We return outwards. Return outwards. This is why we call them return inwards. Return inwards. You see? Return outwards, return inwards. Good. We have cash book. Cash book, it records cash transaction. Only cash transaction. You have seen the 3 books, the books we have discussed about, they record credit transactions. Either purchases or sales. But here, cash transaction. You pay them on spot. When you pay me, I record that you have paid me this. So cash transactions, they are recorded in cash book, cash transaction. All books, we are going to see how we record things in cash book, and it will be very interactive session. I understand, I know that. We have journals, general journal, general. You see, general. So it means any transaction that does not find its way in either of the 5 books above, you know, you are going to record them where? In the general journal. And there will be a session for that. We'll learn how to record in general journal. So you can just say, if somebody asks you to define what is a general journal, you can say, general journal is a subsidiary book that do records any other transaction that does not find its way in the above transactions. Like 1, bad debts. Where have you seen I've mentioned bad debts here? Bad debts will be recorded in general journal. Sale of fixed assets and fixed assets. All things, we are going to see them in general journals. So we are going to learn how to record in the general journal. Now, after you have recorded in the subsidiary books, you will realize you will now post them in the principal books. And we only have 2 types of principal books. 2 types of principal books. We have ledgers and cash book. Ledgers and cash book. So we are also going to learn how we post now in the ledgers after we have recorded where? In these books. Before I go to another thing, there's something here you can get a question. You can just get a question from what we have discussed. You state among the books you have discussed the special books. Special books. How do you identify the special books in these subsidiary books? Now, special books, when you mention special, it means it performs a certain task that is very special. Nothing else. It do a certain task that is very special. Now, if we say so, meaning sales journal, it records credit sales only. Purchases journal, it records credit purchases only. Sales return journal, it records credit sales return to the business, return inwards. Purchases journal, it records return outwards. Cash book, it records cash transaction. So that one, they are very special. So 1 to 5, they are very special. They perform specific task. That is 1 to 5. I know if I could have asked 1 to 6, you mentioned 1, you could have given me cash book because it doesn't have journal at the end of the question, at the end of its name. Because journal, it has got journal at the end of the, it has got a journal, name of journal is attached to it. I know that in some of the paper we have seen the students giving general journals as among the special. No. General journal carries everything now. That does not find its way where? In the special journals. Good. Now, let me come up with something for those who have been in our session for Venn diagrams. Let me, for those, or I can say for those who are mathematically inclined. For those who are mathematically inclined or aligned, let me show you how you can remember these books. Just very simple diagram here that can make us to remember these books very well. That can make us remember these books, subsidiary books and principal books. Good. So I will draw very simple diagram here that will make us to understand more or to remember. So we have that one. You can put a frame. That's a frame. These are for the people we call what? They are mathematically inclined. So I will write there at the top here. You can write AB, meaning accounting books. Books in which business transactions are recorded in. Good. Then I will draw my first circle here. Then come also draw another circle here. For those who have been in Venn diagram classes, and if you have not been there, there's a video on set theory. There you can look on it. So the first circle, I can name it S, meaning subsidiary books. Then the second circle, I can name it P, meaning principal books. Then the outside now, this one, outside, inside, and this area now, we call it general journal. and any other general journal. The first circle is for subsidiary, the other one is for the principal. But the area now outside, that one is called general journal. Now, in the first circle, we have subsidiary books. We'll have their sales journal. We'll have their purchases journal. We'll have sales return journal. Purchases return journal. That is one. Then here, I will have ledgers. Now, which book appears subsidiary and it appears principal? We have what? Cash book. Cash book. For those who are saying union, they can define union. Meaning union in a way that it appears both where? It shares both in subsidiary and in the principal. Good? So I ask you, you give me union SP, you have to give me subsidiary books. Union, or not union, intersection SP, you give me cash book. So that is for those who are mathematically inclined. You can show by this, or you can write this one down, so that when you are asked give types of subsidiary books and their purpose and their functions, you just draw this, and then from there you can get your answers right. This outside part, we have said the general journal, because we said any other transaction that does not find its way in these two boxes or in these two circles, you record in the general journal. Good. What next now? We have to look for the source documents that accompanies these goods when we record in the sales journal. What type of source document? Where do I get this? Where do I source this document? Where do I source this information before I record it there? That is now the next topic. We want to look into the source documents. When you record in the cash books, there is a receipt that will accompany the goods you have bought. Yeah? So source documents. We want to look into source documents. So we'll start with the one, sales journal. We say the sales journal, it do record business. It do records what? Credit sales. It do record credit sales. And which type of source document do we find there? A source document there, we have to get something called sales invoice. That is our source document. Sales invoice. Good. Sales invoice. That is a source document that when you are recording your goods, or you are recording now your goods from you are recording your goods in the, you have made sales to our debtors, you record where? Because these goods you have sold in the credit. So you'll have to record them on the, you source that the information you are recording in the sales journal from the sales invoice. Now, if somebody asks you what's a sales invoice, just tell the, be very brief and tell him that this is an invoice, This is an invoice raised by the firm. This is an invoice raised by the firm. It's raised by the firm and sent to the debtor customer. Sent to the debtor customer when the firm makes credit sales. This is a document. It's a document raised by the firm. It is raised by the firm. This one is raised by the firm. So it's us, we are the ones who are selling goods on credit. So we raise that document. So we raise the firm, we raise that document, and we send it to the debtor. We send it to the debtor. We send it to the debtor customer when the firm we make a credit, when we make credit sale. It's very easy that way. Very easy. Just simple like that. So when I will be recording those transactions in sales journal, you are sourcing for those information where? From the sales invoice. Now, what about purchases journal? Purchases journal, we said purchases journal to do record credit. it do record credit purchases. When the firm buy goods on credit, when their supply goods on credit, we do what? We do record in this book. But those goods are on credit transaction. If we buy goods on cash from our suppliers, we don't record in this book. We only record those books that comes in credit form. Good. So purchases journal, it do record credit purchase. And what type of invoice what type of source document we pick from that information we pick from it? It is called purchases invoice. Purchases invoice. Purchases invoice. Purchases invoice. Purchases invoice is the one source document that will get the information and record in the purchases journal. So the purchases invoice, you can say very in an easy or short way, you can say is an invoice raised by the creditor. This is an invoice raised by the creditor. It's invoice raised by the creditor. Invoice raised by the creditor and sent to the firm. So this is raised by the creditor. Raised by creditor. Sent to the firm. Sent to the firm. It's raised by the creditor and sent to the firm. That makes a credit purchase. Sent to the firm that make a credit purchase. Good. So it'll say this is a document raised by the creditor and sent to the firm that makes credit purchase. Good. Wait, let's go to the next book. We have been told sales return journal, and we said sales return journal. We say this is a book where we do record return inwards. Goods have been returned to the firm due to one reason. One, maybe goods are of poor quality, or goods are in excess, or these goods are not in line with our tastes and preferences. Where do we record? We record in sales return journal. Sales return journal. So what is the source document that will source that information from? Sales return journal. Sales return journal, we do get the information from where? Credit note. Good. Credit note. That is our source document. Credit note. So a credit note, you can say a credit note is raised by the firm. This one is raised by the firm. It's raised by the firm and issued to the debtor. The debtor when the debtor returns some goods back to the firm. So it's raised by the firm and issued to the debtor when he decides to return some goods to us. Good. We have another book called Purchases Return Journal. What is the source document? Purchases Return Journal. We say Purchases Return Journal. It do record goods that are returned outside the business or returned outwards. When we buy goods and we discover they are damaged, maybe they are in excess, we do record there. So the source document there, we call it source document. The source document is called debit note. Debit note, you can say in short, maybe somebody if asks you debit note, we have said it's a source document for purchases return journal. So it say this is raised by the creditor. It's raised by the creditor. This is a book, a source document raised by the creditor. Raised by the creditor. And then the creditor issued issue to the firm, issue to the firm when the firm returns some goods to the creditor. So when these goods are returned to the creditor will raise that note and will issue it to the firm. Will issue it to the firm. Good, when we return some goods due to one reason or another. Next, we have another book which we have what? Cash book. Cash book actually, it has got so many source document. Cash book, but one in common which I understand, cash book you can have, we have receipts. Receipt, when you buy goods on and you pay them on spot, you are issued with the receipts. You are issued by receipt. And then we also have some invoices. Yeah, invoices also. Yeah, it's among the source documents that we do what? We do get from that. We do get from that. Good. Then, so what has remained, comrades or learners? It's now the practical session where we have to look now how we record. We look next video. We are going to see how we record in these books, in the subsidiary books. Then after we have recorded in subsidiary books, I will show you how we post them to the principal books. Then after that, we'll also venture now deeply into cash book, look into the first column cash book, second column cash book, and three column cash book. So just subscribe if you are new to the channel, share so others can also benefit on the same, so that when we come in the next session, all of us, we are aligned and we are on the same page. So for today, may God bless you wherever you are, and I say bye-bye. Thank you.